Welcome to BISP Solutions. I'm Anshi Jain, and today we will discuss about interim tax provisioning in our TRCS application. So basically, by interim tax provision, we mean that a temporary provision is created for the purpose of calculating the tax. Basically, by word interim tax provision, we mean that we will forecast the data. Now, by forecast, we mean that, like for suppose, if we have 3 months actual data and we want to have the interim provision, so we need to have the data for the entire 12 months, but we have the actual data for 3 months only. So what we will do the forecast for the rest of the 9 periods, and that is how we will calculate the interim tax provision. Now, in our TRC's application, this interim tax is calculated at the beginning of the year to estimate the current and the deferred taxes for the interim periods. And this is based on the annualized estimated effective rate of tax, that is AEETR. So this estimated effective rate of tax is calculated automatically. Now, for in the TRC's application, we need to, if we want to have this interim tax provision option, we need to enable this option. So let's go to our application and check whether this option is enabled or not. So we'll go to application. And once this option is enabled, we have further two options of total AEETR and detailed AEETR. We need to enable either of these or both of them we can enable. When we enable this option of total AEETR, a scenario is created named as TRCS forecast scenario, through which we calculate the interim tax provision. So this is my TRCS application. This is the homepage of it. I will go to application, configuration, then enable features. This is my interim tax provision feature is enabled with both total AEETR and detailed AEETR. And as this option is enabled, we could have a scenario named TRCS interim tax provision, forecast interim tax provision. So now how this interim tax provision works, let's see. So this is our home page. We will go to the configurations. We go to application, then we will go to configuration. Now what we will do first, we will copy the configuration. We will perform the income tax provision calculation for the month for the financial year 20. So what we will do, all the configuration present in financial year 2019, we will copy those configurations. So let's change the scenario to actual. Let's check what all configurations we have for the financial year 19. And let's change the financial year to 19. So we can see that a lot of configurations are present in this financial year. All the poll logics have been made. 50% meal have been polled, 50% entertainment, 100% profit before tax. So similar kind of configurations we need for the financial year 20, for which we will be calculating the income tax provision. So what we will do, we will simply copy the configuration and the tax rate for this financial year 20. This is financial year 19. One more different, this all the configuration is on the actual scenario, but we will copy for the financial year 20 on the interim provision forecast scenario. So let's go to configurations. We're on the configuration page and we have the option of copy configuration. So we'll select that. Now, as we want to copy only tax automation rules, so we will select the tax automation rules and provide the POVs for both source and the target. So a scenario, source scenario is actual. Our target scenario would be interim provision forecast. This option is created when we have selected total AEETR. That is why this option is created automatically. Next is enter year. So our source year is financial year 19, from which we need to copy the configuration. And the target year would be financial year 20. Okay, let me show you one thing, that there is nothing in the financial year 20. There is no configuration there. So when we will copy, all the configuration similar to that of financial 19 will be there in the financial year 20. So this is my application. This is my another application. So let's go to tax automation and check for financial year 20. And let's change the scenario also. So we will see that there is no configuration. We can see that there is no configuration present. Now, when we will copy the configuration, I've taken here period as 3 because for the 9 months, we will be going to do the forecasting. This is the 3 months actual data. So for having the actual data, we need to have the same data in the interim provision forecast also. So now we will go to copy configuration. This is actual. This is TRCS interim forecast scenario we have chosen. Financial year 19, financial year 20, because we're doing for the next year. And the period here would be P12, that is the last year. And for this particular target, the period would be period 3. And we will click on run. Okay, so now our configuration has been copied. Similarly, we'll copy the tax rates for the same POV. So my source scenario is actual. My target scenario would be interim provision forecast. Year is financial year 19. So whatever tax rate would be there in 19 will be copied to my financial year 20. Period is P12. And here period would be P3. Click on run. Yes. So I've copied the configurations. Now we will check the configuration. Now let's refresh this. We can see that all the configurations, let's check the POV first. My scenario is interim provision forecast, financial year 20, and the period is 3. Before copying the configuration, it was blank. Now we have copied the configuration from financial year 19. So we could see all the configuration that were present in financial year 19 at period 12 are now present in financial year 20, period 3. Okay. So this is how my configurations have been copied. Now I will close this. Now we will now input the figures. So we'll go to tax provision national package, and we will input one figure for the purpose of calculation of NIBT. So this is the data input where we can input the figures, as we do not have managed data and supplement data. So what we will do, 1,50,000 is written here. Let's make it to 2 lakh. Okay, and then we will save this. I'm just inputting one figure for the purpose of calculation. Click on save. My data has been saved. So my NIBT is, as I've only input the revenue figures, so my NIBT would be 2 lakhs only. Same figure as of revenue. So my profit before tax is 2 lakhs. Let's get back to the home page. Now we have the interim provision tab. So we'll click on this card. Again, we will go to package forecast. Now under package forecast, we have two options. Like this is tax rate has been calculated. Now we will click on refresh. Let's check for our POV, interim provision forecast 20, 30 to P3. Rest all the POVs are same. We click on refresh. We did not got the results. Let's check. Okay, I think we have not run the rule of consolidation. That was our fault. So after inputting the figures, we need to run the consolidation. So that is where we went wrong. Package. And here, after inputting the figures, this 2 lakh, we will run the consolidation rule. P3, interim forecast, NF20, and we'll click on launch. So my rule has been run successfully. Now we will go to interim provision package forecast. We can see that we got the figure of 2 lakh as net NIBT, and it has calculated the tax as per 21% that was copied from the previous financial year. Okay, so now there is one way of inputting the figures, like my 2 lakh revenue is for 3 months. Now, if I want to input the figures, that is I want to forecast for 9 months, what I will do, I will provide the 9 months figure under the adjustment column. So let's say suppose let's input as 6 lakhs. That is, this 6 lakh is for my 9 months. So we can input the forecast data manually also. And then after, we'll click on save. So total will come to 8 lakh. Our total is coming to 8 lakhs. And let's check for our effective rate of tax forecast. It's calculated automatically. The formula for calculating the effective rate of tax is tax expense upon the NIBT. So it has calculated accordingly. So this is one way of calculating the forecast data and effective rate of tax. The other way is, what we can do, instead of manually inputting the figures, we can change its logic, automation logic. So I'm removing this figure, 6 lakhs from here, and I'm clicking on save. Okay, now I will go to my tax automation. So this is one way. The other way is, I will go to application, configuration, tax automation. POVs are correct. Now, instead of, we have this profit before tax. Now, instead of pull logic, we will change the logic to annualized. Now, how this annualized profit works, annualized logic works, let's open the calculator and then I will show you. So we have NIBT of 2 lakhs for 3 months, right? So we have 2 lakhs for 3 months. So this is my 2 lakhs for 3 months. So for 1 month, it would be divided by 3. This is how analyzed logic works. It is 66,666. Now this is for 1 month. We need to calculate for whole entire year. That is, now we will multiply it by 12 to make it for a year. So it comes to 8 lakhs, right? Now this 8 lakh, after applying this analyzed logic, we could directly see in the interim provision tab. Okay, so let's check. We have changed the logic, full logic. Now we have changed the logic to analyze. We'll click on save. Wait just a second. We'll click on save. The data has been saved. Now we will close this and we'll go to interim provision card. Go to interim provision card, package forecast. And now here we will click on refresh. It is coming 2 lakhs. Let's click on refresh. Okay, I think again we forgot to run the rule of consolidation there. Okay. Let's go back to the automation page. Application, automation, configuration, tax automation. Our logic is analyzed, data has been saved. We run the rule of consolidation. Entity is legal entity 101 and period is P3. Scenario is TRCS interim forecast. Enter year is our financial year is 20. So we'll click on launch. What happened? I think something went wrong because it's not showing that rule has been run successfully or not. Let's run the rule again. My POVs are correct, so I'm simply clicking on launch. Okay, so let's go to job and check whether a consolidation has run or not. So consolidation has been completed. Now what we will do, we have changed the logic. Now we will go to an interim provision card and check for the results. Interim provision, package forecast. You can see that we got the figure of 8 lakh. This 8 lakh, how this is calculated, I've shown you manually how we got this 8 lakh. And purposely, when we were inputting the figures manually, I purposely made the adjustments to 6 lakhs so that we can get a total of 8 lakhs. We can check for the ETR again. That is tax expense upon. Now this is 21% as a tax rate, and this rate is due to this 26.21 consolidated ETR is 26.21%. This difference between 21 to 26.21% is because of the temporary differences that we have, temporary and the permanent differences, both of them. So this is a package forecast. We got our forecast figure. So this is how for interim tax provision forecasting is done for the purpose of calculation of interim tax provision. That's all for today. Thank you. For any queries, please reach out us at www.bispsolutions.com.